Joining me today is David Morgan from the Morgan Report. We talk inflation, we talk the Fed, and we talk if the Fed has distorted the Treasury market so much that we can't even trust an inverted yield curve anymore. Guys, I find David to be a super engaging speaker. Every time I scroll past him on YouTube, I got to stop what I'm doing and hear what David has to say. So folks, please enjoy the interview. David, thanks so much for joining us today.
Steve, it's good to be back. Thanks.
Okay, so we just saw the Inflation Reduction Act pass. I got to ask you, do you think that the Inflation Reduction Act is going to reduce inflation?
Not at all. No, it's a joke. Well, all this legislation that takes place, the names given are misnomers. I mean, the Patriot Act was like the Unpatriot Act, and this inflation reduction is inflation acceleration. It's not going to do any good whatsoever at all. I mean, you cannot borrow your way out of a debt problem. Adding to the debt makes it worse, not better. And printing money doesn't print wealth. So we are, again, in a bind that we can't get out of. And the big question, of course, it's been on my mind, your mind, and I don't like to talk about other people, but basically the community of, especially the Austrian school, is when does the market recognize that this debt can't be paid and that we're just going to keep printing until the money is worthless? And that's the big question, because, you know, I can go back into my career and look at the 70s, and we all thought it would happen. And then when it got to 1980, it looked like it was happening. And Volcker pushed the interest rates up to about 20%. And I was overschooled, overeducated. I thought, my goodness, that's mafia money. That's kind of, interest rates you get on the street when you're, playing the numbers game and you can't pay your bookie. I mean, that's 20%. And that was on United States securities, the safest debt of all. And yet it worked. It worked just fine. I thought it was the end. The reason I thought it was the end is because interest rates is a function of risk and reward. Well, the reward is 20%. Well, if you got to push up your interest rate to 20%, there's a lot of risk of holding that asset. That's why a junk bond yields more than a good corporate AAA bond. Because the risk is so much higher, you get a higher interest rate for taking that risk. All that said, that was the best place to be for the last 40 years. That stopped January of this year. So the debt markets are in trouble. The equity markets are in trouble. The gold and silver markets are kind of biding their time. Commodity sector is mixed, because anything that we need, like food, all the agricultural commodities are going to go higher and higher. Energy is the key commodity. Oil's off. I know it's dropped, but it's going to stay high and move higher over time. So we've got a very different shift in the economy globally that isn't going to change. And the trends will continue, meaning it's going to cost more and more for basics, food, energy, that type of thing, housing.
Okay, so you mentioned the debt markets, and we were actually having a conversation with our writers yesterday about sort of what's happening with the yield curve and how it's pretty much the most inverted we've seen in decades. But the thing that's sort of changed since, say, 2008, 2009 is we've now got the Fed coming in and, with all this quantitative easing. The question that we're kind of left scratching our heads at is, has the Fed distorted the Treasury market so much that it doesn't really matter if it's inverted?
I think you can make that case. I mean, when you see the overnight repo market, in the like $1 trillion range,
yeah,
because the banks don't want to loan the money and take any risk. They would rather park it at the Fed and get, basically worry-free interest on it. I mean, this is a bunch of money sloshing around, not knowing where to go. And there's no, let's say, good purpose or use for it. And that's what the banks are holding. And yet you look on the fiscal side with the government, and they just keep borrowing more. I mean, just think about it. I mean, the government really doesn't print money. Yes, the Treasury prints it, but they print it for the Fed. Look at a piece of paper in the U.S. that says Federal Reserve Note. And the government has to go to the Fed and say, we want to borrow some money. And the Fed says, okay, fine. Just think if the Fed said, you guys have borrowed enough. We're not going to loan you anymore. Of course, you can't do that in a debt-based system because the money that's borrowed is X, and then there's always interest on top of X, which means if the money supply doesn't expand, you can never pay the interest on the debt. And as I outlined earlier, and I hope most people understand it, is as those interest rates get higher and higher, it's harder and harder to pay back the debt.
Mm-hmm. So we're seeing a lot of talk online. I'm sure you're familiar with some of the notes that have been passed around from Zoltan Pozsar from Credit Suisse. And we've got this whole idea that there is going to be a commodity-backed currency that, we'll see the BRICS countries use, and predominantly started here by Russia and China. I think it was just last week or the week before that, we saw a large Russian phosphate company issue a yuan-denominated bond. So we're already starting to see the U.S. dollar kind of lose its reserve status. You think that the U.S. really cares that much about what's happening with all these other countries starting to talk about sort of creating this new reserve currency, or do you think that this is something that they're actively trying to figure out? How do we use our leverage to prevent this?
Yeah, I think they are concerned. I don't think they want to give up the reserve status that they have, but for every transaction in oil or gold or ruble that doesn't require U.S. dollars, so a lot of oil is traded in rubles now and other currencies. So that weakens the dollar because if you don't have to have the dollar, there's less demand for it, obviously. And that's taking place as you outlined, Steve. So yeah, they are concerned about it. In fact, that's probably why the Fed continues to tighten, is because you got to keep suckers in the game. And the way you keep suckers in the game is you increase the yield, just like the 20% example I gave a while back. The higher the yield, the higher the risk of holding a dollar that it could become worthless, but you're also getting rewarded for that risk by getting a stronger interest payment. But, I come from the age of when, an 8% loan on a house was like a nice small, was a good loan. I mean, home loans, mortgages were like 15.5% after the Volcker time frame, and it stayed that way for a few years. And they came down, but the idea that you'd have a 2% mortgage or whatever, I mean, that was unthinkable back when I was in my 20s and early 30s. And of course, as interest rates came down, people said, geez, I'm paying 8%. I can refinance at 2.5%. It's going to cost me this many points, but my payment goes from $1,300 a month down to $850. Look at all that free cash flow I just generated. And of course, that subtly adds to the inflationary scenario because now you've got that extra $300 a month that you can buy another car or whatever. People might save it. Most people in America spend it, but you get the idea. So we've been in this financial repression whereby manipulating interest rates. And you ask me, do you think that they're, doing that or, care that much? Yeah, they care a great deal, as you know, and they just want to manipulate as much as they possibly can. But at some point, as I said earlier, people or the markets will say, enough is enough. We don't trust you anymore. And that's a confidence. That's a psychology thing. And I think the psychology has already shifted where a lot of just average people that don't know how the debt markets work, they don't know what equities are. They've never invested in stocks. They probably have just heard about cryptos. They just live paycheck to paycheck. Maybe they've got a savings account. Maybe they've got something with the corporation for retirement. They really don't understand the financial system. What they do understand is that gas costs more and food costs more, and that this dollar is not worth as much as it used to be. And it looks like it's on a trajectory to where they better do something about it, which for the average person that isn't in the financial markets, that means spending it now before it becomes worth less later.
Yeah, I've had this conversation with a couple of people recently, like Doug Casey, I spoke about it with last week. But here in Canada, right, when COVID started, we aggressively took rates down. People were getting mortgages on homes for sub 100 basis points, which just blows my mind. Housing rips, right? Like I think housing across Canada went up something like 40% 18 months after COVID lockdown started. Okay. Now, today we look around, there's a nursing shortage here in Ontario. 10 years ago, you couldn't get a job as a teacher in Ontario. The first year unemployment rate of teachers was 38%, according to the the Federation of Teachers. And today it's down to 1%. They're now hiring non-qualified teachers because they can't find any to work. I believe that what's happened here is that we've created a scenario where a lot of, I don't know if you want to say boomers or older people that were close to retirement, they looked around, they said, okay, I got to use a computer now to teach, or I'm a nurse, I'm getting yelled at and screamed at all day. I'm 5-10 years away from retirement, but you know what? My house has just gone up $500,000 in value. Why do I need to work? And now all of a sudden we're looking around and we're having all these sort of unemployment issues. And it just kind of makes me sort of look around and go, did the Bank of Canada really know what they were doing? And how much carnage are they going to have to create to unwind this?
A great deal. We're going to have to hit bottom. And what does bottom look like? Well, again, needs are going to cost more and more. In Canada, I think you have to refinance every 5 years. Yep. So the house is based on what the cash flow is that you pay out. And so the house price, if we were, 100 basis points, is, you very low payment. So really, if you think about a mortgage or a bank loan for real estate, what are you really doing? People say, well, I don't want to rent, I'd rather buy. But in either case, unless you pay cash, you're renting the money. Mm-hmm. If you are buying a house, you're basically renting the money to buy the house, and then you're paying it back over time, which means interest rates are critical, as we all know. Mm-hmm. But if that interest rate on the refi goes from 100 basis points to 500, all of a sudden that house isn't going to be as valuable because it's all geared or leveraged to what the cost of money is. And when the cost of money increases, that's going to decrease the value of the house. Even though in a perfect world where the free market set the interest rates, we would have much more correspondence of the value of the house, and the payment required for it would be much more of a match than a mismatch. But now, again, with the governments globally repressing the markets and forcing interest rates to whatever level they want them to be, that remains until the market takes over, which it's starting to take over. I mean, that's why you have an inverted yield curve. But as you said, Steve, does it really matter? At this point, not much matters. What matters is what's out there in the economy, and the economy is contracting. So there's less stuff for people to buy, and the purchasing power is degrading at the same time. So hard times are ahead. It will continue. Both those trends will continue, which means most people are going to have a lower and lower and lower standard of living. The middle class will be wiped out for the most part. And we're going to hit a bottom at some point where people say enough is enough. It's not going to be the French Revolution. It will be an information war, basically, where people that don't understand what's going on become educated. And then, of course, there'll be pressure put on the political class, either through demonstrations, which you've already seen worldwide, or protests, or you could see a combination of things. And one would be a lot of these rascals get basically taken out of office, and more conservative force enters in and tries to fix it from the system that we already have, which I wouldn't rule out entirely, although people like myself, and I'm speaking for myself only, have pretty much given up on the authoritarian systems, no matter what they are, because they basically say one thing and do something else.
Mm-hmm. Now, I don't know if you're noticing this from the audience that you speak with and just your readings on social media, but it appears to me that we're starting to see young people kind of wake up to what easy money policies have done to their standard of living. The example I'd cite on this is there is a very conservative candidate here in Canada, Pierre Poilievre, who's really taken over. I'm sure that you've seen some of his content online, and he started to actually take away from the very left side candidate, Jagmeet Singh. And the old saying goes, if you're not a liberal when you're young, you don't have a heart. If you're not a conservative when you're old, you don't have a brain. So we're kind of seeing that sort of old that old anecdote kind of operate in reverse here, where we're actually seeing young people turn to the more conservative right-wing candidate. Are you noticing any of that within your social media circle or your audience and the people you talk to?
Yes, but I kind of am in a bubble. Although
Yep.
I always try to strive to look at both sides, and I watch a lot of documentaries from the left. I read a fair amount of what they say. Some of it's hard to read, but I do because I want to get their perspective. But no, the shift is definitely moving to the right. I mean, if you think about it, or here's how I think about it. It's like if you take a wire and you bend it up and down and up and down. Well, what's happened the last, I'd say, couple of decades is it's been mildly up conservative, mildly down liberal. Then the next round, it goes stronger conservative and then stronger liberal. And now the last 8 years to 12 years, it's been extremely strong liberal, and it'll bounce back extremely conservative. And I think that's the momentum and direction that will take place, probably starting here in the United States with the midterm elections. I expect that if there's not a lot of monkey business and the vote is not what's counted, but is counted accurately, that you will find a big shift through the Congress critters and perhaps the Senate as well for the seats that are up at that time. Yeah, there's definitely a shift. And I want to give a real quick example. I worked with a guy way back when, and he was an only child. His mother was a doctor. She had an unexpected death, and he inherited a fairly significant money. Well, he was young, and he did the girls and the party thing, and he ran out of money after a few years. And he had to go to work. Well, here's as liberal could be while he had all that free money. But once he had to go back to work, he became a staunch conservative. So it's sort of it depends on age, depends on a lot of things. And I'm not saying, I'm open-minded. If you want to be liberal, be liberal. I'd consider myself liberal from the classic sense. I mean, a libertarian point of view is pretty liberal on social issues, but fiscally conservative. We've got to live within our means. If we don't, we have the problems that we're seeing now.
Mm-hmm. Normally, I don't ask you about politics, but with all the stuff that's happening with Trump, you think that this is going to work to the Republicans' advantage and Trump's advantage? There was talk that DeSantis was going to be the front runner for the Republicans, I think, heading into the next election. But if the Democrats, or sorry, I should say the FBI, doesn't come up with something really big here, you think that that this is going to blow up in their face?
Well, certainly that possibility exists. I mean, I'm still of the school that, there's a left wing and a right wing. And as I said, they're getting more and more extreme with each cycle. And they're attached to the same bird. So even though there's a lot in the more conservative space that believe that, Trump is almost the second coming, just like the liberals thought that Obama was the second coming, they're both human beings. They're both men. And basically what most people, even on the right, seem to have understood and have kind of blown it off, this is my opinion, is that there's powers behind the power. And that's what a lot of these Trump fanatics don't seem to recognize, is that he can only do, I mean, he certainly has broken the mold. And there's certainly things that he's done beyond what probably a lot of people expected that he would or could do. But nonetheless, there's still parameters that he has to fit into, or he wouldn't be there. I mean, look, the facts are, and many people can disagree or agree, I don't really care. These things are selection committees, they're not elections. There's no third party force. I mean, if there was like a true libertarian party and they were capturing, 33% of the vote every election, and they had a real voice, then you would see a different, three-party system in the United States. But you don't. You get the two wings attached to the same bird, flying either fast or slow toward the same outcome.
Okay, so let's talk some precious metals here. Ghana announced that they're launching a domestic gold buying program. So Ghana's obviously, they're not a huge country. I think they're around $80 billion a year GDP. So what's that, like 5% of the Canadian GDP? But still, I mean, it's significant when we see central banks starting to turn to gold. You think we're going to see more countries start to add to their gold reserves here over the next couple of years?
Well, I do. And as you know, Steve, central banks worldwide have been net buyers of gold from 2011 on. And then you're seeing like the Zimbabwe gold coin. So, yes, coming to the fore, I really believe the gold run has started. It's just that it's a very slow walk. And as I
Mm-hmm.
use the analogy again and again, it starts as a walk and then a brisk walk and then a jog and then a run and then a fast run, then an all out sprint. And that's a metaphor for how the gold market will accelerate as the depreciating currencies accelerate on their race to the bottom, becoming worth less and worth less and eventually worthless. So the dollar will not become worthless. It won't go to zero, but there will be some type of reset
Mm-hmm.
where either the BRICS take over with a commodity backed currency, as you outlined earlier, and that's the reserve currency. People just get out and dump their dollars and go to the, you know, to that currency, the BRIC currency, or or some implementation of a central bank digital currency where you're basically forced into getting an exchange rate in your local currency that's backed by nothing more than a promise like the Fed Reserve note is now, but you can only transact in a digital currency, not in cash. Cash is basically gone. You're in a cashless society where the authorities, the banking elite, have total control over everything that you buy, and you can have your funds turned off based upon whether you are in agreement with Big Brother or not.
Mm-hmm. Got to ask you the price action in silver. Yeah, what's your near term outlook for silver?
Yeah, it's so frustrating. It really is. But my, well, I have an outline that I just did for another lecture I gave about less than a week ago. And what I discovered in my, because I still research, I still learn. I've never said I know it all. There's a very strong correspondence for gold during a midterm election. And basically, it bottoms in July and basically goes up the rest of the year. So I do think we're going to see stronger gold and silver prices from here up through the end of this year based on that very strong seasonality. But it ebbs and flows. I mean, we get up to 20, it gets close to 21. Like, okay, we got to get to at least 22. And then now we get hit 2 days in a row. But those are the markets. But I still think longer term that you're going to be glad you have precious metals. I think the most negative commentary or comments or trolling that I get, people that bought too much, that buy into the idea of being their own gold-based, bank, and they overdo it. I mean, there is a balance in life, and having sound money is extremely important. And if we could wake up the total population to that fact, we couldn't put a price on gold in paper terms, but we won't. When the end comes, we'll probably move from 1% gold ownership to maybe 2 or 3%.
Yeah, here's hoping. I have conversations with people in my everyday life that, they can't wrap their head around inflation, and they keep charging people the same prices. And then when they finally do decide that it's time to raise prices, it's never nearly enough to be, in line to the relative inflation that they've experienced around them. They can't wrap their head around inflation pass through. And I try to explain to them, and my heart goes out to them because they're just, they're trying to be good, decent people, and they feel like it's wrong to raise prices. And look, in a sound money world, they wouldn't have to worry about these things, at least to the extent that they do under this system where we've got central banks meddling in our everyday life. So I feel exactly the same way you do. And I don't know if you have any of those experiences with any of the sort of businesses you deal with on a day-to-day basis, but there's just a part of it that just kind of makes me just sort of feel really bad for them. And I try to explain to them if I have that kind of relationship with them, even though it works against me, the customer, maybe you should raise your prices.
No, you're right. I mean, I forget who said it. I should know. But only I think it was Keynes himself. Only 1 in a million can detect the subtleties of debasement of the currency, of the inflation. They don't know why it's there or how it comes about. And a lot of people are there, as you outlined.
Yeah. Well, David, thanks so much for hopping on here today. It's always a pleasure when we get to talk to you. Our audience absolutely loves it. And I hope you'll continue to hop back on here in the future, because every time we get a chance to speak with you, we always learn something.
Well, thank you. And I'll be back.
Awesome. Thanks, David.
Bye-bye.
All right, everybody. Thanks so much for watching. And if you haven't already, please hit the like button, subscribe, and ring that notification bell. All right. Thank you, everybody.